We had a story early this morning. Early indicators in China are showing momentum is continuing because of external demand. Exports are booming, obviously. Is there anything more than base effects that's feeding into that story?
Yeah, so it's not just a base effect. If you look at even January, February number for Asia as a whole, not just in China, but there's a sequential improvement in terms of exports. In fact, it grew more than 8% from the previous quarter. So it is not just about the base effect, but there is clearly a sequential improvement in exports as well, and that's driving and supporting growth for Asia when some of the markets or economies are under pressure as far as domestic demand is concerned because of recurring COVID outbreaks.
Okay, now part of that story is Taiwan. I mean, that's just been on a whole different level, from PMIs to where the currency is, to export orders, to the equity market. Is Taiwan at risk of overheating this year?
So Taiwan has done, as you mentioned, well, I mean, very, very well last year and this year. And yes, it does have a positive upward gap, and it will continue to do so. I mean, we're expecting Taiwan to print above 6% growth for the first quarter. But having said that, clearly, I think the CBC right now is focusing on more on the certain pockets of where they see as a heated part of the economy. In particular, they're sensitive to the housing market. They've already put in some strict or more prudential regulation or tighter prudential regulations. But it's not just obviously in Taiwan, but elsewhere in Asia as well. We've seen very sort of focused, targeted, stricter prudential regulations, even in Korea, where we are expecting also a sort of well above potential print in this, for the first quarter, which will come out tomorrow.
Juliana, inflation is still the key question here. We're seeing inflation rise pretty much across the board in Asia. Is there any reason to be concerned about inflation given how fragile the recovery is right now?
Yeah, so, I mean, this is something that we've been mentioning as far as the base effects of inflation is concerned. We are going to see pretty notable increase in headline inflation for Asia as a whole. We're going to see above mid-percent, 2% inflation here. That's more than a percentage increase from our first quarter. But if you look at this core inflation, I mean, we have a huge upward gap, negative gap for some of the economies here. In fact, the upward gap will be significant even next year for some of the economies. I mean, there's definitely a diversion in terms of growth where you look at north versus south, except Singapore, obviously, will belong with the north as far as in terms of the recovery is concerned. It's already recovered to pre-COVID levels in first quarter. This is a quarter earlier than anticipated. And South Korea also recovered earlier than expected. In the first quarter, you see returning back to pre-COVID levels. But in other parts, though, we are seeing significant negative output gap and will remain so even throughout this year and much of next year.
The jury's still out on the U.S. dollar. What assumptions are you making? Could a stronger dollar, higher yield, perhaps force the hands of central bankers in this part of the world, even though the economy may not be ready?
Yeah, certainly that's one of the risks that we're looking at, right? I mean, in terms of the macroeconomic, obviously, environment in places like Indonesia and other places in the southern part of Asia, you would expect it to actually keep the accommodative monetary policy. But clearly, stability of the currency is one of the key points, especially for the I. You heard that again. But we do have to obviously look into the dynamics. And if it comes out where you are going to see or you see a very sharp pressure on the currency, of course, they may have to respond. But so far, the macroeconomic dynamics of especially the southern part of Asia says that they have to stay accommodative. Some places like India, where basically we moved basically a very calibrated exit from very sort of extraordinary monetary policy support. Obviously, that exit now is on the hold because of this coronavirus case there and where we see contraction in the second quarter.
Okay, and the consensus forecasts for the fiscal year 2022, so that's the current one we just started in India, is 11%, Juliana. What I'm trying to get to, yes, it's very early, but does that number now look too high for India?
Yeah, well, dynamics of growth, I mean, we were already sort of pricing in contraction in the second quarter. Clearly, right now, if you look at it in terms of mobility of India, basically it's back to where it used to be, basically September, October, when it was just getting out of the peak of the first wave. And so, you are going to see a contraction, and we do have that priced in. So our relatively more bearish outlook, obviously, even if you compare it to IMF, where basically it's expecting 12.5% growth, ours is at least 2% lower. So we are seeing, obviously, the others going to come more closer to our outlook, and that's actually consistent with the RBI's view as well. But obviously, in the next few weeks is key. We have to see this flattening of the curve, epi curve here. And so otherwise, if we obviously, hopefully not, but, if we cannot get to that point, then we have to also reconsider our outlook. But for now, we already have priced in a sort of the pullback in economic activities in India already.